Hello, guys. Welcome again to Bullish Banter, where we talk about investment, finance, and ways in which you can secure your financial freedom. Today, I'll be your host, Jesse, joined by our favorite commentator.
Hi, guys. Rufas here.
Thank you, Rufus. We'll be touching on a topic every person, at least within the finance sector, has been trying to figure out what is happening. That is the rise, and ultimate risk to the dollar hegemony. I hope it should add some value to your understanding, and the conversation should be interesting. Should you have any input, follow-up questions, do not hesitate to contact us through the social media channels. Dollar hegemony, Rufus.
Yes.
In Kenya, we have had a quite high exchange rate over the last few months. I think from around 120 right now to around 136. And previously you've said it is set to go down. Maybe, I think it has cooled, but not really started to, it has peaked rather,
yes,
but not started to go down. Maybe what are the critical indicators showing that with the peak, a decline is coming in the near days?
When you focus on the dollar, I believe the U.S. Central Bank, or rather the Fed, has a big say in what happens to the dollar than any other factor in the market. So far, the U.S. has decided that its sole focus from its central bank is to control inflation, which peaked at 9.1% in July last year. And this has gone down significantly to the last reading of 6%. But then the actions taken by the Fed has been hiking interest rates at the fastest pace ever, from a limit of 0.25% in March last year to the current level of 5%.
Okay.
So out of the global economies have been suffering from that, the dollar excessively strengthening against other currencies, and at some point there are indications that the U.S. has actually weaponed the dollar against other economies.
Okay.
Yeah.
And just before we go back to the global phase, in terms of Kenya, are there indications that Kenya shilling would be in some way gaining strength against the dollar, and or the dollar weakening against the Kenya shillings?
From our market analyst, president,
yes. Nice one.
You mentioned that we're expecting the Kenya shilling to at least regain some value against the dollar. Maybe we could get back to 115.
Yes.
And I'm guessing the speculation is from the current global economy and what we are seeing. So the Fed is about to get to peak rate. So having hiked at the fastest pace ever, it's not going to continue indefinitely. At some point, it's about to stop.
Yes.
And once that happens, then perhaps we'll start seeing the dollar weakening, and that would be the premium opportunity for the Kenya shilling to start regaining. So on top of that, we also saw the Central Bank of Kenya go for a 75 basis point hike.
A shocking move actually.
That was a big shock, but also it's expected to tighten the supply of Kenya shillings, which would rather strengthen the shilling against the dollar.
Interesting you say that, because I noticed since the last time we talked about the Kenya shilling, the currency reserve, the foreign currency reserve, has been maintaining around 3.6 trillion billion.
Yes.
That is almost around 3-4 months thereabout of import cover, which is actually impressive after that statement. I think the only thing which has not stabilized the price of oil, which is now creating some uncertainties in the market. Now, to the global phase. There is this notion that the Asian markets are either looking to create their own currencies and therefore creating a real threat to the dollar as a principal currency of exchange. Maybe is that logical risk or a threat to its position?
As I've been saying, there's literally cracks everywhere. So
you should trademark that, by the way. It has appeared so many times on Twitter.
No way. But when you look at the dollar and the proceedings we've seen over the last couple of decades, it has become such a big weapon for the U.S. On one side, we have seen the U.S. sanctioning other nations, but then it did not stop there. They went ahead and made it even smaller. They could target an individual and sanction an individual, despite not that individual not being an American. They're sanctioning companies, and even more, they're able to direct countries on who or when you should trade, who you should not trade with, and that has not ranked very well. I think the latest stroke was with Russia, where they basically confiscated their foreign dollar reserves. So countries around the world are not comfortable with that.
Okay.
And that's why you are seeing them seeking other options.
Maybe as we dig deeper into it, how did the dollar come to become such a strong currency that everyone prefers it to be? Like you prefer to actually hold the dollar as opposed to any other currency. I think the only close equivalent is gold.
I think there are two factors to it.
Yeah.
First one was after 1971, when the dollar was delinked from the gold.
Yes.
So from that moment, we saw the dollar taking a very strong hold of the global transactions. On top of that, there was the issue of the petrodollar. This dates back to 1973,
Yes.
when the US made a deal with Saudi Arabia that it would protect Saudi Arabia. So there would be a market for Saudi Arabian oil in the US.
Yeah.
And Saudi Arabia agreed to trade their oil in terms of dollars.
Yes.
So from then, other countries in the Middle East, as well as the rest of the world, started trading their oil in dollars. And now that set a precedent for what we are experiencing right now.
I think you can also credit their political stability has played a big role into it, yeah?
Yes.
The ease of transition, trust on the electoral process, and very limited political interference with the Fed.
I think structurally, when you think about the petrodollar, it's more or less about central banks keeping dollar reserves because they need to import oil.
Okay.
So as long as you need to import oil, you have to keep dollar reserves, meaning that there is consistent demand for the dollar, which stabilizes or keeps the dollar strong at all times.
Now, you mentioned Saudi Arabia, and that is one of the leading exporter of oil right now. And they have been heavily trading with China to the extent of actually allowing countries to purchase on credit, including Kenya.
Yes.
And that means probably will be paying in shillings, which I think we'll have to do like an interbank with another bank until it reaches them. Is that liberalism of their trade in oil a significant threat in the long run, meaning that at least maybe the reserve of oil status will reduce to, say, multilateral of either commodities or something that each country that is trading with Saudi trades in?
I'll take you back to 1971.
Okay.
1973 when the petrodollar was created.
Okay.
So as a result of a majority of countries taking on the dollar as their reserve and creating such a huge demand, the dollar became so strong a currency that industrialization started shifting away from the US to other countries. So we saw a lot of companies moving their manufacturing to China, India, among other nations.
Okay.
So we are seeing a lot of business running in China, Asia, Japan, and so on. And this is where the highest demand of oil is. Right now, as we speak, the highest importer of oil is China. Second importer is India.
Yeah.
So for oil-producing countries, they are looking forward and they know where the demand is. So rather than depend on US as a market for oil, they're looking at where there is growth. So they know in the next 10 or 20 years, they'll be selling their majority of oil in those nations.
Okay.
So that's why we are seeing some of the cracks happening. Countries like Saudi Arabia moving their trade in oil to BRICS countries, definitely.
Interesting. Now, away from the manufacturing, now to the investing space. A lot of countries, including Kenya, we hold maturing bonds, primarily denominated in USD. And I think almost 80% of the global countries which are participating in the debt market do so in USD. So as much as these risks and from the geopolitics and all that manufacturing aspect of it, do you think if 80% of global debt, and this touches on at least either retirement funds, personal investments, corporate investments in dollar, is that really a risk or just maybe a phase in the many other aspects that have caused the threat to the dollar position?
There are two threats to these. On one side, we know that besides the dollar being weaponed in terms of sanctions, it has also been weaponed against the countries in the global south in terms of loans. So whenever we are taking a loan, we basically borrow in US dollars. So in that case, we have to work harder to produce more goods in order to earn those dollars to repay our loans.
Yeah.
So
we have no choice.
Yes. That makes us heavily dependent on the dollar, which the US can literally print out of nothing.
So I've seen these comments before, and probably it will need to be checked. But from most of the foreign ministers from China saying that maybe the sanctions on the dollar and how they are able to print it out regularly through quantitative easing, through maybe repurchase agreements, they tend to weaken the value of the dollar. And this country, specifically China, Japan, I think form the top 3 holders of US debt.
Yes.
Is that maybe now why they are taking a decisive action, maybe to venture into commodity-based economy where they back their currency through what they produce?
The entire idea of dollar hegemony is to socialize debt. So the US has such a mountain of debt, but it's able to socialize that debt, or basically inflate it away by creating infinite demand for the dollar. So for the rest of the world that uses the dollar, their industries are growing, their debts are growing, their population is growing, and with that growth, they need even more dollars.
If I were an investor, and I'm seeing all this news in the cracks, you are seeing a lot of different statements, like our chief market analyst, our president, saying one thing on the dollar. You go to Asia, they are saying something on the dollar. You go to America, the right are basically afraid the dollar will weaken and therefore probably increase inflation on their country. Would I be holding dollar to invest, or would I, let's say, hold my assets in a way that it is not directly related to the dollar, or even earning itself in dollars?
So it's one thing to invest, and it's another thing to read the popular news from BBC, CNN, and so on. The thing is, the dollar is currently very strong and very dominant in the global market. It's still the world reserve currency. I would say that it is still will be the world reserve currency in the next 5 years. So or
more. Personally, I believe there is no real threat.
There's actually a threat. It's only that it's only the cracks that we are seeing. We are not seeing any fundamental shift happening in a big way. Though we saw something with Macron. So if you're an investor and you're looking at the dollar, I think the central focus would be on the Fed and the actions that it's doing right now. So since the records are very public, you can be able to see the Fed balance sheet. You can see the inflation rate. For instance, today we'll be looking at the CPI, or the inflation data from the US. So that will give us a more actionable perspective on the trends, on the shifts on the dollar, rather than the news that are clickbait. You want to see, people like news that change stuff.
Definitely.
And they tend to react
or to provoke your sensitive reaction to it. I think there is a lesson that Euro maybe has taught, maybe a lot personally I've learned from the dollar, and I think that is why personally I prefer to hold the dollar or even gold as opposed to many other currencies. The lack of political interference. I mean, there is that policy changes in the repo and the quantitative easing printing, but in the Eurozone there was a lot of political struggling that maybe didn't allow the euro to grow despite having a very large economic bloc.
I think there's political interference. Following the collapse of Silicon Valley Bank, on that very weekend, I remember it was a Sunday at midnight. This is when there was a surprise briefing from the US president saying that they're announcing a BTFP program. They're opening credit lines to support the banks and restore confidence in the US banking sector. So that was very political because, if anything, I would wait for a response from the Fed chair, Jerome Powell. But in this case, it was the president.
Isn't that maybe how they deal with financial crisis? Because I think in 2008, 2007, they're about Obama and the team from, I think it was Bernanke, the Fed at the time, and the Buffett and the rest were also called upon. At least, isn't that maybe a goodwill from the political side to ensure the financial sector, sort of survives that storm?
It's like swimming in the ocean. The waters are cool until you see the shark. So, so there's no political interference for a while, but eventually, it's there. It's going to get there.
Now, as we sort of get away from, the policy side to now the investing side, there is always this I think it's more worrisome that in your investment circle, you give it like 10 years, and then on the 7th year of those 10 years, you start looking at the cracks you have been mentioning about. Because I think it has been almost 13 years or 15 years since 2008 financial crisis. So it has become more prominent. I think right now the time frame is reducing because we had COVID in 2020. Is it about time now to sort of reevaluate the globalization of finance in the industry in general?
I think the cycles are getting faster. So, the natural economic cycles where you have a boom, a recession, boom, like that. So now they are getting faster. We just had a recession in 2020. Now you're probably headed one towards the end of the year or early next year. So with the cycles getting faster, I think the dollar is losing more and more value.
Definitely.
Relative to a stable asset such as gold. So what we are looking forward to is the US potentially cutting interest rates very fast. As a result of the effects they are feeling right now from the current high interest rates. So already people are beginning to default on their mortgages. The banking sector is really weak as a response to the bank runs that happened earlier last month. We could be seeing the commercial banks in the US lending less. The economy becomes weak and potentially a recession. So you can imagine we just had a recession in 2020 and now 2023, 2024 we get into another one. It really gets bad, and that's why you are seeing out of cracks where countries are trying to safeguard themselves from that particular event.
Nice. I think we have covered something on the first episode about Warren Buffett and Elon Musk about investment cycles. And I was reading something early in the morning where it was like right now following the books of Benjamin Graham, where you do value investing sort of permanently, is sort of obsolete at the moment. You have to be hands-on. Given the circles you have put it accurately, it's becoming short. So you'll have to at least be managing your portfolio at least half year or let's say within a 12-month regular basis, just to make sure it aligns with the market condition. I think that is the way to go, or you disagree?
50-50.
Positive side of 50.
No, that's best.
I think it's important. I mean, I'll say so because right now the price of oil has been elevated to 8, and that petrodollar scenario. And I think last week or a week before, when the OPEC met, they set a benchmark at $80 a barrel, which will probably go on, given that they are starting their cut of production by 1 million plus a day in May 1st going forward, and probably more as the months go by. Will that maybe drive the, if they are not using the dollar, so definitely demand will go down, right? So weakening the dollar, maybe appreciation on the equities until a change in policy again by the OPEC.
I don't think OPEC is changing policy anytime soon. For them, they have a responsibility to their own economies. So they want to get as much value from their oil output. So they respond to global demand. So if the global economy is slowing down, then they also slow down their production to retain prices at a certain level. But at the same time, if oil prices are way too high, then the inflation flows back to them. So for instance, when oil prices were at around $130 per barrel, it was very bad for the oil producing countries because the goods that they import were also highly priced.
So interesting. Now, in line with the future of the dollar, there is this talk. I think China is the first one to implement it, the digital currencies. And I think Secretary Yellen, of course, the ECB chair as well, has been talking about having a digital currency backed by the dollar or whatever commodity they decide. Is that a real threat, or it's just another dollar version, just in numbers, maybe in your computer or in your phone?
So right now, as we speak, a majority of global transactions are digital. In the US, it's heavily digital. Eurozone, it's heavily digital. So when we talk about digital currencies, it's not the same thing as what the central banks are trying to implement. They are implementing what we call a central bank digital currency, or a CBDC. So for a CBDC, it's more or less about control, since they are trying to implement programmable money. So this way they can track where every dollar is being spent, by who is holding that dollar, where is it going, and all that.
Okay. Yeah. Is that a good thing to know where somebody is spending money, or it's an invasion of your privacy? Because I would want to spend as much as I want with no limitations. I think that is what we get from the current status quo.
So for a CBDC, I think with governments having more control, one, they would achieve a short-term target of, let's say, addressing anti-money laundering, terrorism, and all that. But on the other hand, I think the cost is much heavier. Okay. Where there would be invasion of privacy, maybe social controls. I think it's socialism one-on-one.
Okay.
If the government can visualize all the money you have, what you do with your money, you can't even fight back against the government. If there's a policy that you don't like, you can't demonstrate. They can just cut off your money, and you're not able to exercise any rights.
Okay. In summary, the hegemony itself,
yes,
with all these arising and significant threats to it, and I think, like I mentioned, it has been there over a period of time. I think it only appears when maybe there has been some crisis and people are maybe looking for a re-election political office, among many other factors. Plus, of course, the energy crisis and all these things. Is it likely, in your prediction, that maybe the dollar KES to 115, is it something foreseeable for 2023, or until the Fed starts cutting rates?
The Fed is expected to cut rates at least by 50 basis points late this year.
Wow, that is a quite bold statement,
like there's a lot of pressure in the US from the high interest rates.
Okay.
Like if you shift interest rates from literally 0 to 5%, there are people who have mortgages, there are people who are holding bonds, there are people who have personal debt, there are companies which hold commercial bank debts. So all those become very expensive, and they put a very big strain on the economy.
Okay.
So while on the short run, you see inflation coming back and prices stabilizing, then the longer term effects are really bad. And in order to avoid leading the country into a recession and potentially a depression, then the Fed has to react very fast in order to lower interest rates back again. At the same time, early this morning, there was a projection from the ongoing meeting, IMF meetings, that Chinese economy is set to grow at a pace of about 5.2% this year. If this happens...
It's also similar to what they have revised for Kenya as well, 5.3% as well.
Yes, but this is China. It's a superpower, to say. So if China grows at that rate this year, and considering the slow growth in the US, then by next year, the Chinese economy will be the biggest economy in the world.
Definitely.
It will have overtaken the US.
Okay.
So to stop that, the US needs to maintain its current growth and maybe even pump it higher.
Okay.
The correct environment to stimulate growth is like what China is doing. They have retained low interest rates. They are currently doing quantitative easing. Last month, they cut bank reserve requirements, basically freeing about 500 billion yuan into the economy. So we are seeing some good growth, and we're expecting even higher growth.
Okay.
So unless the US reverses policy, it's going to be overtaken. And now considering the bilateral deals happening between China and Saudi Arabia, China and Russia, China and Africa, it's a big, big threat.
Is that why, let's say in Q1, we had a very steady rise in the Nasdaq index? I think all of them closed at least above 5% for the first quarter. And also gold itself has been steady above $2,000. And I've seen a couple of reports of gold traders, among others, putting the target price for gold, at least by end of year, around $2,500 an ounce.
For S&P 500, Nasdaq, Dow, they rallied in January, following this belief that the Fed would stop hiking interest rates after inflation data came in at a negative. And I remember Jerome Powell saying that we have entered a disinflationary period.
Yes.
But then that did not last long. It only lasted 1 month. Then the following month, there was a spike in inflation, and people are like, whoa, wait a minute. Things are not going as expected.
Okay.
So from then, we have seen some weaknesses in US equities, and we are seeing a potential problem where inflation could spike again especially considering the oil output cuts. If oil goes high, then there's more inflationary pressure in the US.
Definitely.
And then the fight against inflation maybe drags on for a couple of more months.
Okay.
And in that case, we would be seeing equities weakening further.
Okay.
Yeah.
What of gold? Because I think it has steadily maintained almost the same habit as when the oil spiked up almost $5 a barrel.
Yeah, gold is up 10% year to date.
Yeah.
Actually 10.2%.
Yes.
So current level above $2,000 an ounce.
Yeah.
I think we are very close to last year's high, and also the high that we saw at the beginning of COVID. You remember when there was a lot of panic, people sold their stocks.
Yeah.
They didn't know how long the COVID lockdowns would last, and gold ride to 2070.
Yes.
Yeah. Last year, when Russia invaded Ukraine, there was also a lot of panic. People didn't know what would happen. Is it a world war? They sold a lot of stuff, and we saw prices spike up to 1969.
Yeah.
So today, with gold touching 2000 and potentially running even higher, then 2070 is in sight. So I think we are about to test last year's high.
I want to just give credit to conspiracy theorists.
Yes.
You know?
Yeah.
If you have read about this guy, Robert Kiyosaki,
yes.
If you check his podcast, I've tried to listen and see how he addresses financial matters at best. Yeah.
Yeah.
He always pushes this agenda that dollar is dying tomorrow, and gold is the currency to go. And I'm taking that with a very good pinch of salt. Yeah.
Yeah.
There is this theory as well, the paper money, the paper gold rather, the paper price of gold versus the metal from the exchanges is quite different, right?
Yeah.
Trying to find the correlation, and with those conspiracy people theories also appealing to a lot of people, is that really a threat to the dollar itself?
Okay, let me stop you right there. I also have my own conspiracy theory. You see, with his first best-selling book, that was Poor Dad, Rich Dad. There's this theory that he made his first million selling that book. No, so I wouldn't take him very serious. Plus, on top, he was promoting guys to join, I think, multi-level marketing on the book.
Okay. Yeah, that's why I'm saying so because... In the world right now, I think I mentioned this earlier, where Andrew Bailey, Bank of England boss, he was saying social media has become such a risk that any bad news spreads faster than realistic news.
Yes.
And we have seen a lot of it based on research like the Hindenburg research on a couple of companies.
Yes.
So if you compound that, it becomes like an echo chamber of bad news against the dollar. So I think for me personally, I don't think the dollar is at risk at the moment. The only thing that is at risk is its strength, but not its reserve status.
Yes. I think the big boys have the big money.
Okay.
And they won't react out of a tweet or some social media stuff. They have like research investments in research departments. So when they are making decisions, they are definitely founded on some fundamental factor. So for now, the dollar is literally strong.
Okay.
But if you look at like a forward projection of Fed interest rates, they are almost at peak, and at some point they will be cutting. So looking forward, nobody would like to hold on to dollars at the peak of the rates. So you might be seeing, for instance, what you have been seeing with the dollar index. The dollar is now beginning to weaken as the market players are foreseeing a period where the Fed will now start cutting interest rates here.
I think that lays a very good foundation for future investing, for a Kenyan, at least a cheaper way to buy the dollar for your personal investments and, retirement plans.
Definitely. I think our chief market analyst has a point.
I agree. I agree. I think that has been a good discussion. Of course, should you have any question, addition, or a follow-up comment, feel free to engage Rufus at Rufus KE.
Yes, on Twitter.
And Twitter, at FXPesa on all the social media platforms, and myself at Ogola J4. And share, like, subscribe. We hope you learn one thing or two. Cheers.
A new episode next Wednesday.
Yes. Subscribe and make sure you put that bell on Apple or Spotify or YouTube. Adios.